It is good evening, everyone. For Thursday, the 25th of April, I'm going to do a daily review. We had a very interesting day today. As you can see, a little bit of unexpected price action, I'll be honest. We came back above Wednesday to make a new high of the week. Now, if you would have asked me yesterday when we closed, would we make a new high of the week? I would have said probably not, right? Um, it was possible that we maybe come back. I wouldn't have wanted the NASDAQ to do it, but we did come back into a premium. So we're officially in a premium on the daily chart. And I think that this is because of the earnings, the Google and the Microsoft earnings we had in the evening that we ran up, and there's a lot of hype right now. But I do think that tomorrow price is going to resume going lower because the GDP news that we got this morning was pretty bad. I'm going to talk about that a little bit. But this is SMT, because if you look at the Dow, okay, now you see the 4-hour chart. We opened up on Thursday and we ran up towards the end of the day. You see the Dow did not do that. The Dow stayed lower. The S&P ran up, but the Dow, right, this was, where did it open up? It opened up around here. See, it closed there, opens up there, dumps lower. NASDAQ dumps lower. But then, as it's running up, the Dow does not run up. It stays lower. That's because tech is what's fueling this run in the NASDAQ and the S&P. It's just the tech, right? The Dow doesn't have much tech in it. So the tech, there's just a lot of hype in it. A lot of people are getting into, the price of Microsoft and Google. If they went up, they're huge portions of the NASDAQ, right? So, and the S&P. So they're obviously going to push up price a lot more than the Dow, right? Because tech is where all the money is. But I don't think that the future earnings are going to be like that. And I think that this is a lot of hype ahead of a bigger move, because you see the S&T is still visible in the higher time frame. We have this high up here all the way down to that high, and then this high all the way up to that high, right? So that is SMT. It happens every quarterly shift. And now we have lower time frame SMT, with the NASDAQ making higher high, and this time the Dow making the lower high, maybe balancing out the higher time frame SMT. But I do want to see tomorrow possibly come back beneath this low, and now maybe actually we might see a new low beneath Monday, right? Or maybe just chilling around the new week opening gap tomorrow. Maybe it might happen. I don't really want to see it continue going higher, but it might continue to go higher and enter this daily fair value gap. But it's just that the weekly chart wouldn't really look that nice. But we'll see what happens tomorrow as price moves for the rest of Asia and London. But right now, I'm wanting to see this SMT hold, and for the NASDAQ, just by looking at the daily chart, push down lower to make a new low beneath Thursday tomorrow, right? Sort of like we had during CPI, when CPI initially went lower and then the next day went higher on Thursday, and I believe Friday, or was it, and then Friday dumped lower, right, to close beneath that Thursday low, right? That initial run, that was after bad news, and that was to get people excited. People thought that we were going to be safe, and then Friday came back and said nope, and Monday obviously went into lower prices. So maybe we'll have the same thing here, because there is SMT that's supporting this. But there's also the GDP, and I'll talk about the GDP a little bit here. For those that don't know, it's pretty important. It's like CPI, NFB, maybe not as much as those, but it's pretty important news, high impact for sure. So this is basically the description is very simple. On the expenditure side, personal consumption expenditures accounts for 68% of goods total GDP, right? So what you spend is 68% of the United States GDP, and out of private investments, so like the stock market, is 16% of the GDP. Government consumption and investments, so government spending and stuff, 18%. Or what the government basically consumes and invests, that's 18%. And then value of goods exported and imported, which net subscribes 3% from the total GDP value. So basically, it's the amount of growth, the rate at which the GDP of the United States is growing, right? And then the more GDP a country has, typically the more money they make. So here you see it's at 3.4%, and the forecast was a drop to 2.5%, which is bad, right? But it dropped to 1.6%, which is a lot worse. And when you have these big crises like we had in, for example, 2007, we had huge market crashes where we have the same liquidity problems as then. You have the GDP which goes to a negative rate, and then the government has to like print a bunch of money, basically help the inflation stop, and then so GDP can continue to grow and people can start spending again and investing money so the GDP can grow. Right, but this is obviously not good. This is showing that there's a slowdown, a major slowdown in the economy, how GDP is starting to not grow, which means that inflation is definitely going higher. And so this would be very, very bad if inflation is actually going higher for the markets, because this is going to basically stop spending, and people may want to save their money more because they can't afford to invest. So now back to technical analysis. Sell side liquidity down here, that is something I'm marking. I want to just mark that. And you look how we had this high yesterday. I talked about how we came up above that and then we dropped lower. I believe that we're seeing something like that up here, where we made an initial run lower and then we came all the way back up, and now we might be preparing to make another run back down to the sell side liquidity. Right now, that's what I'm seeing. We did come back down to 75% I think it was by a couple ticks underneath that, right? But that is if you use the OTE, right, from the optimal trade entry model from ICT, you have 68%, 79%, in the middle 0.705%. That would come out to right about here. That wouldn't have been a bad entry. But one thing I'm noting is how price didn't really expand past this high. You see how the body's closed above it, but it didn't really expand and distance itself from that high. So this is why I'm feeling that this could be a stop run. We could be seeing a reversal tomorrow, still, by looking at this time frame. I'm also noting the midnight open. So the midnight open, I would not be looking to buy above it, and I would not be looking to sell underneath it. Very important. Honestly, it took me a very long time to actually start using the midnight open, because I always kept it on my chart and looked at it, but I never actually used it as an actual barometer and put rules around it. But I'm starting to do that now, and it's actually helping me a lot more. Maybe less opportunities, but I'm okay with that. So this is Asia session, the high and low in white lines. And today I did not like the early morning, right? Because we had the GDP come out and it sent prices lower, obviously, right? But then they reversed and went much higher. So maybe smart money sold initially, created price to go lower, and then they pushed price higher. And as price is rallying ahead of the earnings, they're selling their positions, right, to the public. So price here Asia session. London session makes a low. Right, midnight is around here, and London session makes a low, and then turns higher and makes a high. Then we have the morning session around here open up, and we start to again make a low beneath London and make a high above London. Now this is not very typical. Well, actually, I separate morning AM session and afternoon session. So afternoon session only took one side. But when you see a single session, right, of 6 hours, take out the previous session high and low, you can usually anticipate a sort of stormy conditions for the next session. It either will just chop around and it'll consolidate and do nothing, especially if the London session has a unusually big range. And how do you know that? Well, you just take like the last 5 London sessions, look at their high and low, and then compare it. Is this one, more than 30-40% of the average of the previous 5 London session ranges? If it is, then it's a large London range, and that usually means that there's going to be a lot of choppy price action during the next session. And after like the 8:30 news, 9:30 open, and 10 o'clock news, you'll probably see a lot of consolidation, and price won't really pick one direction, which is what happened here. So when I wake up and I see this big, large London move that traded to the low and high of Asia session, I'm already saying, okay, I'm not really going to trade the AM session. What do I trade then? The PM session, because then the AM session is going to consolidate, and it's going to leave liquidity at the London highs, or whichever side of London it didn't take. It's going to consolidate, and then the PM session is usually going to be really nice and smooth. It's going to aim for the liquidity, the opposite of where the morning, consolidated and left liquidity at, which is these highs. And so, when would you start to look for? The model is at the 1150 macro, right? So the ICT talks about this macro 1150 to 1210. He also talks about 1050 to 1110, 950 to 1010, and 850 to 910. Then he talks about a couple of afternoon ones. Now, these macros, you don't always want to use them. You should only use them when price isn't doing anything. So if there has been a liquidity run, for example, the 8:30 news runs lower, I wouldn't worry about the 950 to 1010 macro. If there's been, right, we've obviously had a huge move, I wouldn't worry about the 950 to 1010 macro. And since price is moving in a range, I wouldn't worry about this macro 1050 to 1110 either, because I know that the morning session is just supposed to chop. So I would look for the macro to transition to the next session, right? The next 6 hour session, which is 1150 to 1010 or 1210, sorry. And that's exactly when price starts to move away from all this consolidation, right? So again, when you see London take out Asia range high and low, when you see that, and Asia and London range leaves a large range, okay, an unusually large range, then you want to see the lunch session have the best trading, okay? Just for your notes. But or lunch or session or the afternoon session, right? Same thing. But yeah, 5-minute chart leaves an order block when price expands away from a 5-minute bullish fair value gap, and then you have a 1-minute fair value gap created as price creates that order block, right? Creates the up close candle, which forms the order block, or closes above the order block and creates that change in the state of delivery. Then price comes back to that fair value gap. You could get into a trade here and hold it to buy side liquidity. That's over 130 points right there, right? That's a weekly salary at your job, even maybe a monthly salary. Could even be a whole yearly salary for somebody. I don't know, depends on what you make it, but right. If I was trading that day, I would have looked for something at lunch. I was not trading today. I was at work, so I didn't not call this ahead of time. But I've called, I called yesterday a bigger move than this. Can I do it consistently? Well, I don't know. Hope so. But this is, looking at this move, like this is, I would be happy with just one of these moves a week, right? But very tricky day if you would have tried to trade through all this morning price action, right? Like I was actually looking at the charts from 10 to 11, and I honestly closed the charts a couple times because when I was looking at the price action over here, I saw no fair value gaps and I saw a bunch of order blocks. I was trying to find a reason to buy, but I really couldn't resonate with anything. There was just a fair value gap there, but then there was order blocks down here and a lot of consolidation. I just wasn't, I could just tell that it just wasn't really the best. And up here with this fair value gap, we were beneath the midnight open, so I didn't really want to sell. And then I had to go to work. A bit after 11, I had to start getting ready. So that was my trading day today. But coming back, sitting down, analyzing it, this pretty beautiful this day. But yeah. But anyways, hope everyone had a good trading day, and yeah, good luck for the rest of the week. We got one day left.